The smaller loan fund is for advances of between £25,000 and £100,000. It's aimed at businesses, it can be start-up businesses, businesses who are looking to expand, businesses who are looking to diversify into new products. It can be used for a wide variety of reasons. The Investment Fund for Scotland is a key initiative under the British Business Bank's £1.6 billion Nations and Regions Investment Funds. It was launched in October 2023 and the IFS is a £150 million fund designed to drive innovation, productivity and job creation across Scotland. It supports new and growing businesses across urban, rural and coastal areas. One of its main offerings is a smaller loans fund. Managed by DSL Business Finance, this provides loans from £25,000 to £100,000 to help businesses grow. Standalone entities can apply for funding, so by that I mean partnerships, limited companies, limited liability partnerships. They are all eligible for funding. The only people that are unable to apply due to lack of eligibility are sole traders. Business loans can be used for a variety of purposes. We've done a few all across a whole spectrum. So, for example, we've done start-up funding for a cafe in Edinburgh. We have done start-up funding for a mobile hairdressing and beauticians business. We've done expansion funding for a legal firm who were looking to acquire a larger client base, and for that reason they were looking to spend a lot on marketing, etc. So there's a whole range of reasons that it can be used for. The lend itself ranges from £25,000 to £100,000. The maximum repayment term is over 60 months. We take a 2% admin fee upon approval, so that's payable before the loan's drawn down. And in terms of interest, the interest margin can vary between 10 and 14% depending on the risk profile of what we're looking at, of the proposal. So as an example to that, if it's a start-up business and there's very limited security available, that's obviously going to be at the higher end of the margin. If it's a business that perhaps owns their own premises and are able to offer those as security, then that's going to de-risk it slightly, and we could potentially look at the lower end of the interest spectrum at that point. The minimum security we take is, if you're a limited company or a limited liability partnership, a bond and floating charge and personal guarantee from the directors. The directors' guarantees are not collateralised. We don't touch anybody's family home or anything like that. It would be an unsupported guarantee. Where we might take collateral would be if, for example, the business owned its own premises and there was sufficient equity in there for us to take a charge over that. That would have the benefit of de-risking the proposal, and the client could take advantage of a slightly lower interest rate in that scenario. When an applicant comes to us, the information that we're really looking for will include 2 years financial accounts, so that's 2 years year-end accounts. We also look for up-to-date management information, and by that I mean an up-to-date trading profit and loss. So if, for example, your year-end is in January, we would expect to see your year-end accounts in January and then a trading P&L to take us from January to whatever month you're actually making the application. In addition to that, we look for 2 years forward projections. We look for both a cash flow and profit and loss projections. We look for up-to-date 3 months bank statements. We also look for a business plan. Now, your business plan doesn't need to run to pages. It basically needs to tell us, this is my business, this is what it does, this is what I'm trying to do, this is why I need the money, and this is how my money is going to be spent. First of all, it would probably be helpful for most people to know what a CDFI is, and that actually stands for a Community Development Finance Institution. These are essentially non-profit institutions that were set up to generate economic growth, sometimes in specific small areas of Scotland, sometimes bigger areas. So DSL is a CDFI, and we're a non-profit making organisation. The way we differ is probably because we look at everything on a case-by-case basis. We look at reasons to do a deal as opposed to reasons for not doing a deal. It is a manual process, which some people can find frustrating. It's not a enter your information in and computer says yes or no, but that makes it much more inclusive. Because if, for example, there's maybe something shows up in your personal credit history. Rather than it blowing you out of the application process at that point in time, then we'll sit and listen, what's the explanation for that, what actions have been taken to address it. So we look at everything on a case-by-case basis. We get to know you as the applicant. Wherever possible, we would try to come out and find out what's going on in your business as well and try to get a better understanding of that. It's very much a personal touch and it's quite a personal journey to go through the application process. When applying for the loan, businesses always need to make sure that they can afford the loan repayments. It sounds obvious, but it happens sometimes that people don't really take into account that the money they're borrowing actually does need to be repaid. That's why we ask for projections as well, because in your cash flow projections, for example, your loan repayments will be built into that. I would also always encourage people to be absolutely sure of the amount, the level of funding that they actually need. Some people, I think, will maybe go and apply for something lower because they maybe feel they have a better chance of getting it, but it's actually insufficient to fund the project that they're looking to fund. That again tends to come out in the cash flows. We don't want to overfund people. We don't want people to be taking on more borrowing than they can actually afford, but we need to make sure that it is at the right level to be able to deliver what the ultimate end game is. At the start of the loan process, you will be allocated a specific loan officer, and they will be your point of contact throughout the entire process. So that loan officer will speak with you, set up a meeting with you, discuss your business plan, discuss your cash flows. We will probe. We will ask, have you thought about such and such, or I don't see a cost for this included in your projections, or have you thought about something else that might actually affect the outcome? I always tell my clients, okay, that's me finished writing my paper, which has to go to underwriting. I'll let them know where we are in that process. I'll also try and give a realistic time frame, because that can obviously change according to workloads, etc. It also is very dependent on how quickly we receive information from the applicants as well, and how accurate that information is. That will have quite a big bearing on the route to funds and the time it actually takes from the initial application to delivery of funds. But I think the most important thing is the fact that you will have that one-to-one journey throughout the lifetime of the process, and we always aim to be transparent and keep you informed, and we would ask basically for the same in return. The Smaller Loan Fund supports entrepreneurship. It assists with job creation throughout Scotland, and it provides a route to funds for those businesses, particularly startups and those that don't have a strong track record, with a route to funding that they perhaps normally wouldn't be able to have access to. That's easy. If you go to the DSL website, you can fill out an inquiry form, and one of our loan officers will get in touch with you directly just to speak through what you've put on that form and find out a wee bit more information, and then they'll tell you the information that we need and send out the necessary loan forms to take your application forward.